Good afternoon, everyone, and welcome to this webinar from the Institute of Export and International Trade, looking at importing and exporting in the automotive sector in 2021. My name is William Barnes-Graham, the Senior Content Editor at the Institute, and I'm your host for this afternoon. And we're looking forward to hearing lots of interaction from you, our audience, over the next hour. Now, the end of the transition period is really truly looming upon us, and how we trade with the European Union is going to change, whether we reach a deal or not. Throughout all of this, proper planning and ensuring compliance with changing regulations and obligations is a must for effective and timely trade after the transition finishes. It's for this reason we're delighted to be partnering with the Welsh Automotive Forum on today's webinar. And I'm delighted to welcome Tim Williams from WAF today. Hi there, Tim.
William, good afternoon, thank you.
And alongside Tim, we will be hearing from Kevin Shakespeare from the UK Customs Academy. Kevin, how's it where you are today? How are you?
Yeah, good, thank you, and good afternoon, everybody.
Kevin is one of the lead tutors on the Academy and has been leading the Institute of Export and International Trade's training and analysis around the UK's future trading relationship with the EU, and is a regular speaker on our myriad webinar programs. But to begin with, we'll be running a quick poll to start the webinar. It's going to be on the next slide, which I'm going to launch for everyone to answer now. Now, this question is asking you, how prepared do you feel for changes to trade with the EU at the end of the transition period? The options range from very prepared to not at all prepared, and there's a not sure option there as well. Just a couple of housekeeping notes to get through while this poll is ongoing. Firstly, you can contact me with any comments or questions using the question panel on the control window to the right-hand side of your screen. And afterwards, you will receive access to today's slide pack and a recording of the webinar. So do make sure to really listen in to what Tim and Kevin have to say. But now I'm going to reveal the poll findings. So 74% are quite prepared. That's pretty high. Not many very prepared, but it's probably still a couple of months away, and there's still much to find out about the deal, if there is one. Not very prepared, there's 21%, and then 5% not sure, but for that 26 or so percent, we hope today's webinar will be useful. Move on to the next slide, and I'm delighted to now hand over to Tim to say a few words before Kevin's presentation. Over to you, Tim.
William, thanks very much and welcome everybody. Really pleased to see a good turnout from forum membership for this really important topic. And Kevin, special thanks to you for going through the presentation after I conclude. Interesting in that poll that was just shown, because we did a similar survey of our members recently. There are 27 responses, so it was a fairly quick survey. Interestingly, 50% said they weren't confident in their preparations, and 70% unaware of border operating model. So we seem to have differences perhaps across the whole membership, but as we go through the presentation, please come forward with your questions. You have the experts ready on hand to answer them. But, you know, as an industry sector, we're dealing obviously with COVID. We're dealing with a pretty major downturn in the industry at present. And on top of that, we have this question mark looming over us in terms of what will January the 1st be like. Not to frighten everybody, but the radio presenter this morning reckoned there could be 7,000 trucks lined up either side of the border if things don't go quite the way we want to. So really important that we understand the implications around transition, what we need to be doing if we haven't done it already, and hopefully many of you have done the right things. But what is it going to be like, and how will this affect us? So, you know, our industry under severe pressure, and transition to add to that. So without further ado, let me hand over to Kevin to take us through this very important presentation. Kevin, over to you. Thank you.
Thank you very much, Tim. And so it's a pleasure to be able to present today, and a pleasure to work with you. So in terms of the content today, we'll be looking at, if you like, approaches to some of the big trading issues, clearly tariffs, declarations, and customs compliance. And the really key point today is it's not just about paperwork and declarations. There's compliance and trade facilitation as well. We will look at the UK border operating model. We'll also look at Incoterms, international commercial terms, and how they determine supplier customer responsibility. We'll look at some of the key aspects of facilitation and compliance, such as classification, valuation, and also linking in with that commodity codes as well. We'll look at some of the VAT impacts. We'll look at trade with Northern Ireland and some of the impacts there. And we'll just conclude with around readiness planning and things to consider. So if we can have a next slide, please. So we're going to start with some of the key aspects of what's happening currently. So if we have a next slide, please. So clearly on the 31st of December, the UK leaves or at the end of a transition period, it's already left the European Union, but at the end of a transition period, it formally leaves the single market and the customs union. And then we have differences in how we trade for the first time in nearly 30 years. So a lot of these changes will apply. There's a lot of talk at the moment about a trade deal between the UK and the EU, but all that trade deal will do predominantly is, hopefully there will be a trade deal, will result in zero tariffs. That in many respects is the best case scenario. There may be some mutual recognition on areas such as GDPR or CE marking or chemicals, for example, but the main element of discussions at the moment is around zero tariffs. But if there is no trade deal, then tariffs would apply. So we talk a little bit about that in the next slide. But the main impact that will happen, irrespective of a trade deal or not, is the UK will be a third country in its trade with the European Union, in the same way as United States, Canada, and other countries are. And we will leave the customs union, and we will require customs declarations, but also safety and security declarations, which I will talk about. But as I've indicated, customs declarations is not just about something that has to happen. It brings into new aspects of documentation and compliance, which we'll talk about that. Now, the EU has advised that all new procedures will be required from the 1st of January, where the UK are talking about some phasing of import controls. And I will refer to the border operating model in terms of some of those controls. If we can have the next slide, please. So when we think about tariffs, so let's be clear, if there is no trade deal between the UK and the EU, there will be tariffs on goods entering the United Kingdom from the European Union. And we can actually be a bit more specific about that. We're talking about Great Britain here. We will talk about Northern Ireland separately. So for Wales, England and Scotland, GB, there will be tariffs on goods entering Great Britain from the European Union. And any goods that move from Great Britain to the European Union, there will be tariffs on the UK exports. And they're predominantly referred to as import tariffs, and in the majority of cases they are paid by the importer. There is one instance where it would be paid for by the exporter, which I will refer to. Now, you can determine the level of tariff applicable to your goods, and some of you may already have done that by looking on the UK's tariff checker. For the examples here, I've taken 4 examples of commodity codes and products and tried to compare what the UK global import tariff is against the EU common external tariff. So is it important in terms of the comparison? Well, potentially it is if you're importing goods from the rest of the world, and the EU doesn't currently have a trade deal with the country concerned. But equally, if you're importing goods from the European Union, one of these goods as an example, then there will be additional tariffs here, as we can see on screen, if you're bringing the goods into the United Kingdom in the second column. In the third column, if you're moving goods from Great Britain to the European Union, you have the additional tariffs there of the EU Common External Tariff. So we can clearly see whether it's 2%, whether it's 4.5%, that these tariffs could impact on margins. So clearly a trade deal becomes quite important if one can be obtained. If we have the next slide, please. So we've looked at tariffs and the impact, and that's a big impact, and that does depend on whether there is a trade deal. But now let's look at the requirements for customs and safety and security declarations that will happen irrespective of whether there's a trade deal or not. So if we have the next slide, please. So from 1st of January 2021, goods moving between the UK and again more specifically Great Britain and the EU will move between different customs territories. So currently we have one customs territory, it's the European Union's customs territory, but there will be two. There'll be the customs territory of the United Kingdom and the customs territory of the EU. And whenever goods move from one customs territory to another, you need an outbound export customs declaration and you need an inbound import declaration as well. So two declarations, one for the export country and one for the import country or territory in the case of the European Union. So somebody has to make those declarations, and depending on the Incoterms, which we'll talk about, they determine responsibility for both or either of these customs declarations. Irrespective of whoever makes the declaration, even if you use a freight forwarder or an agent to do it, you are liable in the eyes of customs for that declaration, and not just the declaration, but everything that goes with it, including the likes of commodity codes, valuation of goods, origin of goods, which we will talk about as well. So it's important, obviously, to try and get the processes correct. Those of you familiar with rest of world trade already will be familiar with these processes. It's just a question of volume. But if you solely traded within the European Union, then you have these new issues to contend with. So we have a next slide, please. So this is quite a busy slide, so I'm just going to focus on it, and bearing in mind these slides will be available to you. This shows the movement of a trade journey, and it's obviously showing a trade journey between different customs territories. So currently, whilst the goods move, there are no customs declarations, no additional procedures. That all changes from the 1st of January. Whenever goods leave a customs territory, a customs declaration is required, and on the export side, and the import declaration is required. But there's a lot more to that, as we're going to talk about. And that also applies to goods moving to and from the Republic of Ireland as well as part of the European Union. We will talk about Northern Ireland separately. If we can have a next slide, please. So exports to the EU or GB. So it's now we're looking at the export side. What is different in the exporting country? So we've talked, if we go to the bottom side in the light blue shading, we talked about the requirement for export customs declarations. So exports will be 0 rated for VAT, similar to rest of world. And just to confirm, for exports from from Great Britain, Intrastat will still apply for record keeping purposes in 2021. There will additionally be a requirement for safety and security exit declaration from the export side. And that exit declaration is normally provided by the haulier, and it needs to be provided in advance of the goods arriving at customs in the country or port of departure. So that's important, but it's normally provided by the haulier, but you may want to check your haulier is aware of those requirements and has procedures in place. There clearly are requirements for labelling, analysis and placing goods on the market, depending on the type of product, and we loosely refer to that later in terms of CE marking of products and packaging and labelling as well. There may be a requirement for origin certificates to indicate that these goods are, in the case of the UK origin, or in the case of the European Union, EU origin. So there will be 2 sets of origin from the 1st of January, whereas currently it's all EU or EC, European Community origin. If you have temporary exports, there is a requirement for an AtaCarne to avoid any potential tariffs and wider declarations. So that can include goods taken over for exhibitions or for demonstration purposes. And as long as the goods are not sold in the country or purchased in the country abroad, they can be brought back under an AtaCarne. So that is a new requirement as well from the 1st of January. And any wooden packaging must be what we call ISPM 15 compliant. So it must be specially heat treated as well. So when goods leave one customs territory and move another customs territory, they must be specially heat treated and have the ISPM 15 kite mark on. So that's another important factor for businesses to consider. So we looked at exports. Now let's look at imports. So exports out of a country. What's needed on imports into a country? Well, as we said, there could be possible import tariffs if there's no trade deal. Import customs declarations, compliance on labelling. So goods brought into the UK market will require, for example, a new UK CA marking. Import VAT is usually payable upon importation. We're going to look at VAT later. In the UK, we have postponed VAT accounting, which I'll talk about. Entry, safety and security declaration, again, normally provided by the haulier in advance of the goods arriving at the port of arrival. And again, the wooden packaging must be ISPM 15 compliant, especially heat treated. So that's sort of indicating here that this is not just about the customs declaration. There's a lot more for placing goods on the market and other things that have to be considered. And there are the considerations within the customs declaration. And that's partly why the government has allocated £50 million worth of grant funding to businesses to try and make sure that businesses are aware of these issues and they can prepare accordingly. If we have a next slide, please. So now let's look at imports into the UK in terms of the border operating model. Now, the UK has announced a border operating model and a three-stage process. So for a lot of goods in the automotive sector, these will be standard goods. So non-standard goods are referred to as controlled goods, such as live animals, excise goods, beverages, and goods that have a military purpose. So standard goods which will apply. Importers into the UK have the opportunity to defer declarations for up to 6 months from the date of import, so up to the 1st of July. And equally, if you bring goods in, for example, on the 1st of April, you can make your full final declaration anytime up to the 1st of October. But the main benefit of that would be to defer the duty, the import duty, import tariff payable on the goods. But there is a process there that you need to enter the documents or entry into declarant records into your own records, or your forwarder or your agent can do it for you for a charge. So that's going to apply from the 1st of January to the 30th of June. And from the 1st of July, we have full import controls. Full customs declarations, full safety and security declarations, and full payment of tariff as it becomes due if there is no trade deal. Now you see at the bottom there, I've got in blue shading, businesses should also consider CFSP on a permanent basis. I'm going to talk about that more because there are several customs authorizations and special procedures that can be used to actually benefit businesses, and we're going to have a bit of focus on that because that is a way of good business practice to try and reduce or eliminate some of the impacts of post-transition trading. So I will be speaking about that more and explaining more what I mean. If we can have a next slide, please. Okay, so customs declaration. Personally, I don't like the word paperwork. I know it's one that's being used because it's that sort of tries to lessen the importance of it. Somebody, as I said, is responsible for declarations, and we have two declarations here, the export declaration and the import declaration. There are certain procedures, again, which I'll look at, which can reduce the need for a full declaration, but I'll come back to that shortly. So somebody has to make these declarations. Is it the importer or is it the exporter? And are they responsible for both, or one for the export side, one for the import side? But trade and customs law requires that the trader the importer or the exporter, is responsible for all the information on the declaration, even if the forwarder is making it on your behalf. So in that declaration, there are a number of fields to consider. One is using the correct commodity code, and you can see the information on commodity codes. Commodity codes are absolutely vital. They determine the level of any import duties, tariffs, and VAT to be levied. So if you have the incorrect commodity code, that could result in incorrect duty, tariffs, and VAT, which could be quite serious. They also determine any licensing and compliance requirements of the product. And what we suggest to any businesses is there are some commodity codes in the other category. Customs obviously look at things in the other category and they think, why is it in other? Can somebody be more specific? So what you can possibly do is you can seek a binding tariff information, BTI, in which you're asking customs to provide a commodity code for you. Now, if you've clearly been using the wrong commodity code for years, you could leave yourselves open to customs saying, well, have you been using this before? You've been using the wrong one. So that's a consideration. But if you're not sure of the commodity code and you're trading with the EU where customs declarations will be required, seeking a binding tariff information could be important, because customs have the right to go back 6 years to look at every commodity code if they think the commodity codes are incorrect. And unfortunately, if commodity codes are incorrect, they can issue fines for each incorrect shipment with each incorrect commodity code, and also claw back any unpaid duty and VAT as appropriate. So getting commodity codes correct is important. Declaring the correct valuation, come on to origin later, but correct valuation of the goods. So clearly it's very important that companies value goods correctly, and customs authorities have commodity code checkers and valuation checkers to try and see if any goods are undervalued for purposes of, let's say, paying less duty and less VAT. There is actually a big article this morning I read that the European Union is concerned in the e-commerce sector. There's been lots of undervaluation of goods and it's looking to take action there because companies have been incorrectly valuing the value. Not saying it's only happening in this case, but you need to make sure it has a realistic market valuation to it. The declarant of records are responsible for all the trade documentation. It must be correct. VAT we've talked about, maintaining proof of export. So on a customs audit, they would also look for evidence that you have a full proof of export import file. So you have full documentation, which would include the commercial invoice, the packing list, the transport document, the bill of lading, the airway bill as appropriate, and also the customs declaration itself. So currently only applicable for rest of world trade. So that full proof of export is very important. Again, because if you haven't got it, you could be fined. But equally for VAT purposes as well, if you're zero rating your exports for VAT, if you don't have full proof of export that the goods have left the shore of Great Britain, you could be subject again to payment or clawback of VAT and any licenses. So as we can see, suddenly we're getting a lot more than just paperwork and customs declaration. There's a lot more involved to this as well. Those of you involved in rest of world trade probably would be already aware of this. So we have the next slide, please. Okay, now I've talked about Incoterms and responsibility. So Incoterms clearly determine obligations, and this is just an overview there. There are 11 sets of Incoterms, and that they determine responsibility for each part of a trade journey. And I'm going to pick out 4 specific Incoterms in the next slide. And they also talk about whether freight is collected or freight prepaid. So let's look at the next slide, please. So within the European Union, we have a situation where the main Incoterms used tend to be these 4, but even more so, they tend to be 2, Exworks or DDP, delivered duty paid. And these are quite significant in terms of post-transition trading. Again, from a GB to EU perspective, excluding Northern Ireland at this stage, we'll come back to Northern Ireland as I've said. So Exworks would mean where your customer, if you were exporting from GB to European Union, your customer in the European Union is responsible for collecting the goods at your premises. So Exworks, Kettering, Exworks, Mansfield, for example, would be the overseas buyer is responsible. Now, in the new world of customs declarations, that means that the European buyer is responsible for the outbound declaration in the UK. They would then need a UK EORI and a UK VAT number, and they would be the UK declarant of record and liable to UK customs. So is your European customer aware of that? Might they push back and say, oh, I don't want all the extra costs and all the extra work here, and move towards free carrier, which is still can be collection at your premises at Kettering, at Mansfield, for example. But you are responsible there as the exporter for the customs declaration, declarant of record. There is a point in loading and unloading goods, which I'm happy to take questions on, because under Exworks, responsibility for the loading is the responsibility of the overseas buyer through their freight forwarder and haulier, and not your responsibility. Happy to take questions in that respect. So that's one aspect of Exworks, and will we get that pushback? If you have a UK exporter thinking, well, I haven't got to do anything, could they just pick it all up at the moment? Will that continue? Then we have delivered duty paid, DDP, which is where effectively you're responsible for the lorry collecting, moving the goods to the buyer's premises. So let's say in Madrid, in Porto, Lisbon, etc. You're responsible there, obviously through your freight forwarder or haulier, for moving those goods. So that means that you're responsible for the declaration in the UK, but also in the European Union. You are responsible for any import tariffs. You have to pay them, and you have to pay any import VAT as well in the European Union. Now that is an awful lot to take on. Equally, we're conscious though that some customers in the EU might say, well, that's your problem. You want to keep the business, you've got to deliver duty paid and deliver everything to us. So we do accept, obviously, that is a situation that is occurring. So in those circumstances, you would require to obtain an EU EORI number and an EU VAT number from one customs authority in the EU. And again, happy to take questions on that later. But you are also liable to the customs authorities for tariffs and VAT. So they would be payable upon importation unless you have some form of deferment with the customs authority in the EU, or your freight forwarder is happy to assist you with use of their deferment account. So big issues in that respect that could arise there. So important that businesses, and happy to take further questions in that regard. In some EU countries, if you get an EU VAT number, you need a fiscal representative, an agent, who is going to operate on your behalf with liability. France, Italy would be examples of those countries. If we have a next slide, please. So we're doing fine for time. I just wanted to include this in terms of the importer declarant of record, the person responsible for the import. So as we can see there, duty and VAT, accuracy of information, authenticity of documents, any licenses, which means that you are subject to audit by the customs authority of the European country, as well as HMRC in the UK. So it's a lot to take on. Doesn't mean that businesses don't do it to retain business or grow business, but businesses need to be aware. And yes, if they get support of their freight forwarder or agent, that's great, but they are still ultimately liable. If we have a next slide, please. So making a customs declaration, yes, using a customs intermediary, forward agent, broker, or making it yourself. Now, if you were to make it yourself, clearly that's a big undertaking, and some of you may have already moved towards that process. There is a grant scheme at the moment, £50 million grant scheme. Currently around £14 million of that has already been used in a 6-week period. So businesses need to be aware that the money is being used up quite fast. And you can get grants if you are intending to make declarations for training, for recruitment, and for software. But it is a big undertaking to take on, and businesses need to consider. Again, very happy to take further questions in that respect around any requirements companies are looking at to make declarations. There is a balancing figure there, I guess, in terms of how many declarations you'll be making and how much control you want of processes. If we have the next slide, please. So VAT, let's look at VAT, which is, we can't ignore that. It's also very, very important. If we have the next slide, please. Now, with regard to the UK, the situation around VAT is relatively simplified. The UK announced in the budget that it's the first time since 1993, outside of the European Union, it will introduce postponed VAT accounting, which means that any imports from anywhere in the world, not just the European Union, will be subject to postponed VAT accounting. You don't have to apply to it. It means that you can offset VAT on your VAT return. So that does, in theory, in practice, mean that your any VAT deferment account you have with HM Revenue and Customs will no longer be required. And again, any supporting bank guarantee will no longer be required. So that's important as well. Now, but let's look, that's the UK side, but what about the EU? So the principle is anywhere in the world that VAT is payable upon importation, unless the country has some form of postponed VAT, which the UK has. So for your goods which move from Great Britain to the European Union, VAT will be payable unless there is some form of deferment account agreed with the customs authority or authorities in the EU. And that would normally require a bank guarantee to support it. So as sometimes fiscal representative as well. So that would normally be paid for clearly under most Incoterms by the overseas buyer, the importer. So are they aware of that? Now they'll still be able to offset the VAT, but they'll have that cash flow impact upon paying VAT straight away. But if you're selling on DDP terms, the VAT liability is your own. And that comes back to the points we've made around you are liable to the customs authority for unpaid VAT. And in some countries that requires a fiscal representative who will need to be paid for their services. Excuse me. If we have a next slide, please. Now I want to cover trade with Northern Ireland. If we have a next slide, please. Now Northern Ireland is, I guess, interesting, and when I talked about two customs territories, it's part of the customs territory of the United Kingdom, but it's also part of the customs territory of the European Union. So the island of Ireland, under the withdrawal agreement, is part of the customs territory of the European Union as well. So the working principle at the moment is customs declarations will be required for goods moving from Great Britain to Northern Ireland. That will only be an inbound declaration. There won't need to be an outbound one in GB, but there will need to be an inbound declaration. There will also need to be an entry, safety and security declaration made by the haulier forwarder. And goods at risk, so those identified as moving at risk from Northern Ireland to the Republic of Ireland, tariffs may apply in the event of no trade deal, of course, and then there will need to be rebated if evidence is provided. Now, currently the list of at-risk goods hasn't been defined. There's a joint committee which is defining the at-risk goods, and the process of defining at-risk goods needs also to be defined. Will it be through the commodity code, for example? So also it's not clear in terms of this rebate. So if your goods are not on the at-risk and they stay in Northern Ireland, well, that's fine. If goods enter a manufacturing process in Northern Ireland, that becomes an interesting one. Will they be assumed that they could end up in the Republic and tariffs will apply? Or will it be accepted more self-certification that companies will be able to say, no, they're staying in Northern Ireland, and then it would be subject to evidence. So effectively upon audit by HMRC, you say, well, here's the evidence to prove they stayed in Northern Ireland. Great. If you can't provide that evidence, obviously you'll be subject to a fine, tariffs, etc. But will it be that form of self-certification and evidence required upon audit? That needs to be agreed as well between the UK and the European Union. Now, clearly, we don't have products of animal origin, but they would require sanitary and phytosanitary checks as well, in addition. So I guess one aspect is some of you may have heard of the Trader Support Service, TSS. So the idea is that there will be support available for businesses moving from GB to NI, and clearly carriers, freight forwarders, intermediaries, agents as well, to support the making of that declaration. Again, further information will be provided in that respect. If any of the businesses are clearly on the call, and I think we've probably got a slide later on this, are moving goods between GB and NI from either side, please register on the link, and we'll provide information in that respect. If we have a next slide, please. So further considerations. So if we have a next slide, we're going to look at trade with the rest of the world. So this is not just about the European Union. The way UK trades changes with the rest of the world potentially as well. So currently, for example, the EU has trade agreements with 74 countries. Some of those are part of trading blocks. Now, so what's going to happen is the UK has to sign continuity agreements with all those 74 countries. And you have a web link on screen here, which provides details of which countries the UK has signed continuity agreements with. I'll speak about Japan separately on the next slide. So we can see here there are some trade agreements which have been subject to continuity agreements, like Norway, Chile, Morocco, for example, South Korea. But equally, there's countries where trade deals have not been signed yet. So we have a next slide, please. So we can see some important countries here, like Canada, like Turkey, Singapore, for example, where engagement is ongoing in terms of a trade continuity agreement. So what that means is if a trade deal is not struck, that tariffs could apply on goods, UK goods moving to these countries. But clearly the UK is also discussing trade agreements. Japan, as has been recently announced, is entering fruition and is progressed. We're just waiting for final details of what the trade deal is. So Japan, it looks, has completed. So we have trade deals the UK is discussing with the likes of the United States, Australia and New Zealand currently, and obviously we'll wait to see how they progress. So, but these are sort of examples of countries where the EU has trade deals which have been continued on the previous slide or currently subject to negotiation. Let's be clear, there is no EU trade deal with the United States, no EU trade deal with India, no EU trade deal with China. If we have a next slide, please. So I wanted to cover rules of origin because this in theory is quite a big issue for the automotive sector, but it will all depend on each individual one of you and your specific requirements. Everyone is different. Now the basic principle is that if you move goods under preferential trade, a trade deal, that you must be able to evidence the goods are of a certain level of origin. So we look at the example at the moment. If goods move from EU to let's say Canada, for example, the trade deal will say that they can enter Canada duty-free for automotive products, component parts, cars, etc., in addition to other products, but they must have a certain percentage of EU origin, which could be around 50 or 60%, which generally that's what the EU operate depending on the country. So currently UK is part of that EU origin. If the UK strikes a trade deal with Canada soon, then effectively the indication is that it will require to be 50–60% of UK origin. So that means that you can't count EU origin as part of UK origin, and vice versa. The only way that would change is if a trade deal that UK signed allowed EU origin to be continued. And it's done that with the South Korea trade deal for 3 years. Then it will end. So, but the EU would have to go back in every one of its trade deals and include UK as part of it. So what that means, if you're exporting to the European Union from the 1st of January, and those goods are going outside of the EU, and you're part of that final export is a big part of it, it may not meet the needs of the EU trade deal with the third country. So you do need to look at your whole supply chain and who you're supplying and who you're selling there. So that becomes quite important there, and that it can work all ways. So that's something to consider. If there is an UK-EU trade deal, then the goods will indicate 50, 40, 50, 60% will need to be of UK origin to enter European Union free of any duty. So that only creates an impact for you if a lot of your component part is from China or India or somewhere like that, for example. So rules of origin become very, very important, and you also need to consider that in terms of your UK supply chain. So am I selling to someone in the UK who's exporting to the EU or another part of the world? Am I purchasing goods from the UK which are coming in from the EU and the rest of the world? Because suddenly tariffs and origin all become relevant as you are an indirect importer or indirect exporter, so to speak, which is why rules of origin become really, really important. If we have a next slide, please. So further consideration. So just wanted to quickly go through these. We're coming towards the end of the slides now. GDPR, so if you're holding data on EU nationals, consumers, it's something to consider. Happy to take questions. It's not the main part of the presentation today. Intellectual property, there'll be a new UK trademark. There'll be a cloning of the current EU trademark. We need to agree the rules on business travel with a short stay travel without visas. To continue to use the CE marking for the product, you need to be certified by an EU notifying body or an organisation within the EU. VAT on trade-in services. So VAT in trade-in services remains as it is today. It's based on the supplier rule. So if you are providing a service to a VAT registered business in the European Union in Spain, the VAT is payable in Spain. Review your legal terms and conditions. Are your goods subject to licenses? So are they dual use goods that have a military or civilian purpose? If they are, your exports to European Union will require an open general license. And clearly, do you have EU nationals working in your business in the UK? Have they applied for the EU settlement and pre-settlement scheme? If we have a next slide, please. So as we come towards the end, and if we have a next slide, please, we'll just look at some factors to consider. Communication with customers, suppliers and stakeholders becomes absolutely fundamental. Identify any trade tariffs that may apply. Discuss any changes to VAT arrangements. Be clear on Incoterms. Who is responsible for what? Prepare for customs declarations. Communicate also, as we said, with your UK customers and suppliers. Ensure you're compliant with all product compliance. We talked about the CE marking, there's packaging and labelling, there's other things, REACH for chemicals, which I'm happy to talk about as well. And ensure you're compliant. Know you have the correct commodity code. Ensure you have your records, origin and valuation of goods. Liaise with key stakeholders such as freight forwarders, banks if required. And avoid misunderstandings, which is an important one, is that your European supplier or customers thinks, oh, they're taking care of that in the UK, I don't need to worry about that. Communication becomes vital. And if we have the next slide, please. So finally, create an action plan of activity. These are just some examples. I'm not necessarily going through each one, but think about what the impacts are. So the final thing which I've not covered here, which I want to speak about verbally, is customs special procedures. So when I talk about special procedures and authorizations, I mean things like CFSP, which is Customs Freight Simplified Procedures, which is the bulking, which can be the bulking of import declarations. So the idea is if you use CFSP, the expedited, quicker clearance of imported goods. It means that you make a simplified declaration, you make a supplementary declaration on the 4th working day of the following month. You can also bulk your declarations, so you're making one declaration as opposed to multiple declarations. Your freight forwarder can do that for you as well. Obviously, like any services, quite understandably, they'll charge for that service. But that is, if you're making lots of declarations, it's well worth considering that. If you're bringing goods in from the European Union or from China or from India, and you're entering them into a manufacturing process and you're re-exporting them, you might want to consider inward processing, which is another customs authorization, where upon re-export, you do not need to pay import VAT or import duty. So if you're bringing goods in, for example, from one part of the European Union, Germany, and you're then re-exporting them to the Republic of Ireland, if you use inward processing, You don't have to pay the import duty and import that. That is if there is import duty, clearly. And you can also hold them in a customs warehouse, which is another customs special procedure, where again, if you re-export, you do not pay any import duty and import that. And equally, if you release them into free circulation into the UK, you only pay import duty and import that when you're releasing them out of the customs warehouse. That's a quick overview. I've covered quite a lot today, and I appreciate you'll have some questions. But again, if you want to find out anything more on special procedures, the warehouse and inward processing, CFSP, please do not hesitate to contact us. I've not spoken about authorized economic operator today. If any of you are being put under pressure to become AEOs or you're ready AEOs, I'm very happy to take questions on that. So on that note, I'll hand back and thank you very much for listening to me. Thank you.
Thank you, Kevin. And if we go into the next slide, you should be able to see here how you can ask questions. So just use the control panel to the right-hand side of your screen. We've had a few questions in already. One from Tobias. This is, I think, a clarification really, but Tobias is referring to the bit where you're talking about tariffs if a deal between the EU and the UK will be agreed. He asks, will they be negotiated as part of free trade agreement, and as such, will only originating goods be exempt from tariffs?
Yeah, it's a good question. So yeah, clearly they will be negotiated as part of a trade deal and negotiated at each tariff line. So it is possible to have trade deals where some goods are still subject to tariffs. So the rules, again, origin are again each tariff, each commodity code line. And I guess automotive might not be the most emotive subject. Agricultural goods and fisheries, as we know, and financial services are perhaps more emotive in the actual trade deal. With regard to originating goods and rules of accumulation, it's a really good question. So again, the answer is in every EU trade deal to date, the rules of accumulation apply. So in other words, if you're moving goods from the EU to the UK and back to the EU, the rules of accumulation will apply for purposes of origin. So in that instance, it will be deemed to have met the origin requirements.
A couple of questions in from James, who's asked, firstly, a clarification, what is the difference between a commodity code and an HS code, which would apply in which situations? And another question from James, which is, when importing from the rest of the world through Europe, what would the implications be?
Okay, good question. Okay, so two questions there. So the HS code is the harmonized system code, which is set at a world level. So from the HS code, the EU commodity code is determined. So it's just an addition of codes there. So in many respects, it's the same code. The HS code is set at a world level, and the classification commodity, sometimes referred to as tariff and product codes, is an extension of that to introduce the codes applicable for the European Union. So in all intents and purposes, the same thing. With regard to the rest of the world to Europe, so if you're moving goods from the rest of the world to Europe to the UK, if goods move on a transshipment basis, then no tariffs are due. So for example, if goods are moving from, say, Shanghai to Rotterdam to Felixstowe, then as long as goods move and they're not effectively the only movement is the transshipment, it's moved from one vessel to another, no tariffs and no customs declarations, customs interference, if you like, is required. If goods are obviously taken out of a container at Felixstowe, then effectively the declaration has to be made in the European Union, and then the goods have to be moved under another customs declaration. But if it moves under transshipment basis, and declarations are not required.
Thank you. Just a nice flurry of questions just come in. One from David, who's asked, for the 60% rules of origin, does the labour and overhead value of the part is it included in the content of, or is it just for material?
Yeah, really, really good question. So it could be 60%, it could be 50%. UK wants it at 40%. So that, and again, it's agreed on each tariff, each commodity code line. Let's say it's 50%, which probably is a more realistic figure. So it's really 50% of, if you like, the cost you're charging or you're declaring to customs. So in answer to your point, yes, that can include packaging, labeling, it can add in the value to it. So it's not just the cost of the raw material. Yes, that can include labor. So if you're selling something, you're adding value to that, whether it's your brand, whatever it is, whether it's the labor, the expertise, the packaging, the labeling. So yes, that can definitely be included in it. And you also have something called the last rule of substantial transformation. If you brought in a good, changed the manufacturing process and a commodity code and created employment in the United Kingdom, you can claim the goods are substantial to last substantial transformation through a manufacturing process, production process, and you could meet the rules of origin under that.
Thank you, Kevin. Thank you as well for the questions. One from Johannes, I hope I got that correct. Is there already a process for empty boxes or pallets in case they get returned to the EU? Are there any declarations required?
Yeah, this is the question again, predominantly for the Republic of Ireland as opposed to the rest. If you have empty pallets, it's possible that you can use what's called returns good relief. I suggest that you send in separate details, but can you advise the countries concerned that we're talking about here, and we'll endeavour to provide. But again, that is a customs procedure that you need to apply for, or your freight forwarder may be able to assist you in that respect.
Thank you. That sounds another good question. So one from Julia, who's asked, if we were to hold stock in an EU distributor's warehouses to tide us over during the transition period, what tariffs would we be liable for?
Again, a good question. A couple of ways of looking at this question. Apologies, I'm not familiar with the specific circumstances. If you move those goods in an EU warehouse prior to the 31st of December, obviously there's no customs procedures, no tariffs applicable prior to the 31st of December. Obviously after the 31st of December, it all becomes different. But if you were to move them after, then there would be subject to customs procedures and customs declarations. Now, if that warehouse is your own warehouse and you have customs authorization in the EU, you would need to have approval from the customs authority of the country concerned to continue to use your customs warehousing status. You'd no longer be able to rely on the UK HMRC approval. Apologies if not understood the question correctly.
No follow-up as of yet, so hopefully that's been helpful. A question from Dominic, who's asked, can an AtaCarne be used for specialized tooling temporarily imported to carry out a specific manufacturing or maintenance task? Oh,
that's a really interesting one. So the concept of AtaCarne, I guess, predominantly comes from goods brought in for likes of exhibition. It's used a lot in Formula One, for example. So if the goods are sold in any way, then clearly they become subject to declarations and tariffs as appropriate. If they're used in a production process, that becomes an interesting question there. So if the goods enter a country and go out of a country more or less in relatively same condition, generally an AtaCarne applies. The tooling side of it is a really interesting question. Ultimately, that is down to the issuer of the carne, whether that is, if we look at a UK side, whether that's going to be a Chambers of Commerce, whether that is going to be HMRC themselves, or whether there's going to be special agencies that can issue carne certificates. So it's a really good question there. I think it may be influenced by the extent the tooling is used and how much, if you like, whether the tooling comes back, it's still in working order, or whether it's, if you like, proverbially exhausted and doesn't have any reusable value. So I think it's an extremely valid question, and I would definitely probably make the inquiry about using it under a carne. but I think it might depend on what condition it comes back in. But that would be down to the authorities to determine.
A couple questions on declarations. Leslie has asked, is there any possibility of not needing any customs declarations if a deal is made? And we had another question from Dominic, who's asked just how much time and resource goes into completing declarations by yourself, and is there any update on the new CDS system?
Okay, yeah, so 3 questions there. So yeah, customs declarations will be required irrespective of a trade deal because the UK is leaving the customs union. The first question, with regard to yourself, I think clearly it does depend on the nature of the product there. So an import declaration is more time consuming than an export declaration. There's more fields required. So therefore, the time obviously varies. Clearly, the first time you're doing it is going to take longer the more you do it. And the question is, can you template it? What type of software are you using, and how does that interface with your systems? What's the quality of your commercial invoice, your packing list? But it's certainly possible for businesses to do themselves, but they do need to consider the implications of doing it and weigh that up with obviously using an agent to freight forwarder. But as I say, it's an individual decision for each business. But again, we're happy to look at specific examples. We need details, the number of shipments as well. With regard to CDS, the Customs Declaration Service, which is a system which is there to, if you like, supersede the current Chief system, it's been clearly announced that the 2 systems will run in parallel. So Chief will continue the current system throughout 2021 and possibly beyond, but the intention is in time that the new CDS Customs Declaration Service will be used.
Thank you, Kevin. I think we've gotten to most of the users' questions today. If we didn't get to your question, please feel free. On the next slide, actually, you'll see our contact details where we can pick up any other questions. I just wanted to bring back Tim to ask, have you seen any kind of recurring questions or theme come up from an industry perspective?
I think the questions we've had have been excellent. Very interesting, the last one on the tooling repair especially. So thanks everybody for your questions. They've been really, really good. One I may ask myself is around business travel. Kevin, I know you mentioned about business travel, but I've heard stories that you have to have proof of national insurance being paid to you and have a certificate about that if you want to do business travel. But what's the real definition of post?
Yeah, it's a really good question, because there's a lot of visibility on this on business travel as opposed to personal travel. In October last year, as there was potential for leaving with no deal. And the EU had offered at the time that definition of a short stay would be 90 days in any 180 days in the European Union would be defined as a short stay. Anything over that would require a visa. But the EU made that offer to the UK, and it was contingent on the UK offering a similar deal to the EU. Obviously, that didn't come into play. So currently, I think we're waiting, to the best of my knowledge, would stress to the best of my knowledge, what the current arrangements would be from 1st of January next year. Will that EU offer that was on the table then still be there, and will the UK reciprocate? So at the time, it was 90 days out of any 180-day period you could stay without the requirement for a visa.
That clears that one up. Thanks very much, Kevin. William, I'm conscious of time. I think we've got a couple of minutes left. If I may just say thank you very much indeed to William, Ian, and certainly to Kevin for going through a really complex topic here. And I'm sure that there will be people who want to come back to you, Kevin, and assuming that that is okay, will be a conduit for that to happen. It just shows the enormous complexity around this topic. So for me personally, on behalf of the listeners and the membership, William, thank you for organising. Kevin, thank you very much for your expertise in that a very clear, concise run through a very difficult, complex set of issues. So William, back to you to finalise. Thank you.
Many thanks, Tim, and it's been an absolute pleasure as always to support, and yeah, we hope everyone has found it useful today. Yeah, once again, thank you to Tim for partnering with us in the Welsh Automotive Forum, and also Kevin once again for his time preparing for the presentation. On the final slide, you will find details about how you can get in contact with the UK Customs Academy if you do have any further questions or queries, or of course you can contact Tim and he will pass you our way. Please do also let us know if you have any suggestions for future topics. There's an exit survey where you can let us know such things. But for now, I'll leave the slide open for a couple of seconds, and after that, I will finish the webinar. Thank you, everyone.
Thank you.